Investment Portfolio Analysis. We are team number 4, composed by Marwa Watt, Mario Avila, Claudia Lopez, Alexis Curi, and Nikki Oust. For our portfolio analysis, we selected 2 domestic companies and 2 foreign ADRs. For ADRs, we chose 2 globally known telecom multinational corporations, American Mobile from Mexico and Orange from France. And for domestic companies, we chose 2 very popular multinational corporations, being Google and Starbucks. We were given $10,000 worth of stock for each of these companies, and here are the results from February 2nd to April 19 of 2016.
One of our foreign ADRs is América Móvil, a telecommunications corporation headquartered in Mexico City, Mexico, who offers domestic and international telecom services, including mobile and landline phone services, internet access, messaging, mobile entertainment, data transmission, email services, and they even offer tech gadgets, accessories, and gaming services. Their ticker is AMOV, and they are traded on NASDAQ. The company was founded in 2000, and their current CEO is Daniel Haj Abomrad. América Móvil is the largest and most valuable mobile operator in Mexico. Since their creation, América Móvil has gained a monopoly over the Mexican telecommunications industry due to lack of regulation from the Federal Telecommunications Institute, or the IFT, within the Mexican government. It has been reported that the lack of competition has cost the Mexican economy roughly $25 billion each year by elevating consumer costs and hindering incentives for small businesses to modernize or innovate new services. In 2014, however, AT&T Inc., another international telecom giant, was allowed to enter the market by method of acquisition, purchasing 2 smaller companies, Luzacell and Nextel. Since then, the IFT has experienced internal and external pressure to allow more freedom in the telecom industry for the sake of the Mexican economy. As you can see on the graph, on February 9, 2016, the ADR dropped significantly due to the effect of the internal regulatory sanctions put in place by the IFT. The price of América Móvil's ADR dropped from $13.68 to $13.29. 2 days later, on February 11th, a public announcement by the Mexican government was made confirming the IFT's decision to allow AT&T Inc. and América Móvil to go head-to-head in an auction for 4G LTE spectrum for advanced wireless services, or network frequency space. The pressure and threat from AT&T dropped América Móvil's price from $13.29 to $13.04 the next day. On March 3rd, the news of the winner of the auction were announced. América Móvil won the auction, purchasing 2.1 billion Mexican pesos, approximately 117 million, worth of mobile internet frequencies, followed by AT&T Inc., who paid 1.03 billion Mexican pesos, approximately $57.4 million. The optimism of the win, which promised to spur innovation and higher quality in mobile data services, resulted in América Móvil's ADR price to jump to $14.84 by March 8th. The ADR continued on a steady rise until the end of the month. On April 18th, a major shareholder in América Móvil, the Slim family, controlled by billionaire Carlos Slim, voted to create a 12 billion Mexican peso, equivalent to approximately $689 million stock purchase fund, in order to buy back shares of the company. This action drove the América Móvil's ADR price to 15.69 the following day. América Móvil, as we have mentioned before, is headquartered in Mexico and therefore must convert any account receivable transactions into Mexican pesos. This poses a significant transaction risk for the company. Its largest clients are located in Latin America and include Brazil, Argentina, Colombia, and Costa Rica. Their exchange rates are compared to the US dollar as shown in the graph. From the historical exchange rate data, we can see that the transactions in Costa Rica, Argentina, and Brazil are overall constant during the period, while the inflation of the Colombian peso decreases the revenues of América Móvil overall.
Second foreign ADR that we chose was Orange. The ticker for Orange is ORAN, and it competes on the NASDAQ stock market. Their headquarters are in Paris, and they were founded in 1991. As mentioned before, it is a French telecommunications corporation. However, they compete on an international level, and they are one of the multinational telecommunications corporations. They offer telecommunication services to over 200 million customers, and that ranges from services from between landline services to IPTV services. The Orange stock, if we look at its graph on the next slide, did actually not turn a profit. It generated a net loss of $111.12. And if we look here on the graph, you can see at the beginning that there is a trough. On that trough, it was around February 9th, and the competitor Freemobile came out with an affordable and high-quality plan for customers, and it was €5 a month, all calls and unlimited internet. Orange took a big hit there. And then later on, if we look at the next big trough, it's actually a pretty big dip. Up until that last dip, which is around February 4th, there were talks of a merger of Bouygues and Orange, and so that brought stock up. However, around April 4th, the merger failed, and the telecommunications sector in France lost about 9 to 10 billion euros, which accounts for that drop in the price. For the Orange historical exchange rates, when comparing the currency's exchange rate movements and the performance of the stock over the investment period, there really is no comparison, seeing as the exchange rates remained fairly stable during the entire period between February 2nd to April 19th. When comparing América Móvil and Orange to the S&P 500 index, you can see that América Móvil follows fairly the same stock price movement as the S&P 500, while it has a slight trough around February 8th to around February 12th. But apart from that, it is fairly in correlation with the S&P 500. For Orange, it is also in correlation with the S&P 500. However, for the huge decline in the stock price from between March 28th to early April, around April 8th, and that was also due to the failed merger.
The first of the two U.S. multinational corporations we chose is Alphabet Incorporated, which was formerly known as Google. Alphabet Incorporated is a multinational conglomerate company. They're the parent company of Google and several other companies previously owned by Google, which include Android and YouTube. Their ticker is GOOG or GOOGL, and they are also publicly traded on NASDAQ. Alphabet Incorporated was founded on October 2nd, 2015 by CEO Larry Page. Their headquarters are located in Mountain View, California. We chose to invest in this company because it is speared by innovation. We were able to purchase 13 shares of stock initially priced at $764.65. At its highest, Google was at $764.65. At the lowest point during these few months, the share price was $678.11. The last share price was at $753.93. When comparing Alphabet Inc. stock prices to the S&P 500 index, we can see that there is a positive correlation, which shows that the stock's price movement is driven by the U.S. market conditions. When looking at the historical exchange rate, we compare the U.S. dollar to the Chinese yuan, the euro, the Australian dollar, and the Canadian dollar due to Google's foreign relations with each of these countries. From this graph, we can see that Alphabet Inc.'s stock prices have no direct correlation to the exchange rates of these respective countries. When looking at the historical exchange rate, we compare the U.S. dollar to the Chinese yuan, the euro, the Australian dollar, and the Canadian dollar due to Google's foreign relations with each of these countries. From this graph, we can see that Alphabet Inc.'s stock prices have no direct correlation to the exchange rates of these respective countries.
Another U.S. multinational corporation is Starbucks. Starbucks Coffee is a coffee house chain that was founded in Seattle, Washington, March 30th, 1971, and it's still where its headquarters are. Its current CEO is Howard Schultz. Its ticker is SBUX, and they are traded on NASDAQ. This multinational coffee house company has, as of June 28, 2015, 22,519 stores, with retail stores in over 70 different countries. The initial price of the shares we bought were $60.69. The highest share price was $60.90, and the lowest share price was $54.42. The last share price was $60.90, with a total change of 0.48%. The total gain was $48.50. As shown on the graph, we can see that on February 8th, the Starbucks stock dropped. This was due because investors soured on high multiple companies. When comparing Starbucks to the S&P 500 index, we can see that there is a positive correlation between the two. Like we mentioned before, Starbucks is a multinational corporation. With this being said, Japan, Canada, and China have the most amount of Starbucks coffee chains in comparison to the rest of the countries. On the Starbucks historical exchange rate graph, it is visible that the exchange rates do not have an effect on the company's performance internationally.
After the given 12 weeks to study the fluctuation of the Selectech stock, we came to a total worth increase of 3.07% of the cumulative stocks of the previous mentioning companies. We had gains in both American Mobile and Starbucks. However, we experienced losses from Google and Orange. Looking back at our investments, we could have made a significant gain with Google stock if we had purchased the stocks 1 week after we did. As well, we had selected another company instead of Orange, since the entire French telecommunications market has been underperforming for the past few weeks. In behalf of team number 4, we're grateful for the attention given in our portfolio analysis. Thank you.